Hi, everybody. Welcome to our weekly call. This is our home buyer workshop, and we provide this information free for you guys every week, 5 o'clock p.m. Central Pacific time and 8 p.m. Eastern time. So this home buyer workshop is just basically in providing information in case you're looking to possibly downsize and sell your home and you're looking to purchase a home, or maybe you're upgrading and expanding and you'd like to get into another home. So we provide different topics every week and just arming you with loads and loads of current market activity and what to expect. This week, the market has changed as far as interest rates go, and they continue to change daily. So what are the rates today, Gustavo? Where are we at?
Yeah, I think if everybody looks at the national average on the retail side, it's probably getting closer and closer to 7. I see there, and it's around 6.9 and a little bit north of that. And it's something that is going to get a lot of airtime, meaning in the news, right? Mortgage rates going up. It may scare some people away. Definitely talk to your loan originator if you're right now in the process. It's something that you definitely want to keep an eye on. As a mortgage broker, I do have a different rate. I do have lower rates because of the different business models. There's less costs on this side, so there is a little bit of a lower rate. But overall, everybody's rates are going up at the same rate.
Yeah, I'm doing a quick screen share right now. And it looks like, back in November, we had rates that were up over 7%, more like 7.30. And as we can see here today, according to the data, we're at 6.94 today for a 30-year fixed.
Yeah.
So, I mean, this is obviously of some concern for people that are looking to, I know I've spoken to a couple of homeowners recently that were interested in selling their property, but they're also concerned about restarting a 30-year mortgage and getting into, leaving a low mortgage rate that they're in right now. There might be somewhere in the 4% range, and getting into a new mortgage where they're going to be in the 6 and 7% range. So basically, we still have this trend right now where sellers are paying for their concessions on most deals that I've seen. Sellers are contributing something towards the buyer's concession. And you can use those funds, as we've mentioned before on this call, towards a rate buy down or just lowering your closing costs altogether. So I know we were discussing earlier the PMI and how that affects also the costs in getting a new loan, aside from the interest rate. So FHA has a mortgage insurance premium, and then any conventional loan where you're putting down less than 20% also has a certain percentage for the mortgage insurance, right? So what does it look like for, let's just do a quick example. What does it look like for, let's say, an FHA loan versus maybe a $600,000, sales price? You're getting an FHA loan versus a conventional loan where you're putting down maybe 10%. Is there a really big difference in the PMI that's going to be the buyer's going to face that they have to pay on each loan?
Yeah, so FHA, we mentioned that they're going to be reducing here their monthly mortgage insurance, right? So it's going to go down 30 basis points, which is great.
And that's coming up this month, right? In March.
Yeah. Yep. So that's going to take effect here very quickly, and that's going to help out. The last time I did those numbers, sort of like a $600,000 scenario, like you said, it went from a $425 mortgage payment, monthly insurance payment, to about $275. So it was a good $150 savings a month.
Wow, and that's pretty substantial, right? Yeah. For FHA buyers. It's exciting. Yeah.
Yeah.
Does that increase their purchasing power, or does it just lower the monthly fee?
It can increase their purchasing power if, for example, they are maxing out at, let's say, no more than $4,000 altogether. Well, now that lowers it by $150. So maybe they can get an extra $5,000, right? An extra $8,000. So that may be enough to be competitive with some offers, right, that are coming in at asking price, So that could make a difference. So that's something where, you know, the mortgage insurance on the FHA will help out. It's a move that has been, I think, a lot of people have been calling for since probably COVID. You know, they've been having these higher fees, and I think it's a right time to do it. Somebody else that has done it is the VA. So they've gone ahead and they've also adjusted their funding fee. So that's come down a little bit as well. So that's going to help service members so that it could be a little bit more affordable. Also, the VA is a great program already. So you have, if you're a military retire, still in active duty, you're looking at, you know, a 0% down loan. You're looking at no mortgage insurance. You're looking at interest rates about a whole percent lower than a conventional. So they really have a really great opportunity. And I would encourage anybody that is eligible to get a VA loan to do so.
Mm-hmm.
Now,
And
you mentioned,
what was the percentage for the VA funding fee? I know it's a certain percentage of the loan amount, correct?
yeah, so it's a 2.30. That was
Okay.
the funding fee, and they reduced it to 2.15, so 15 basis points.
Mhm.
In some scenarios, if it's your subsequent use, that's for a first time use. If it's your subsequent use, they reduce it up to 30 basis points as well. So it all depends on, you know, if you're doing 0% down or if you're doing 5% down. So it has a little bit of a sliding scale.
Okay.
Yeah.
And as far as so right now we're talking about the VA funding loans, VA loans and the funding fee.
Mhm.
Is it typical for a, you know, a VA customer, let's say a VA borrower, to pay for the funding fee? Do they have that option to pay it, or is it usually just rolled into the loan amount and
Yeah, they
finance?
can exactly. They can finance it very much like the same like the FHA does. So, you know, at FHA you have that upfront mortgage insurance, which is 1.75.
Mm-hmm.
So they can finance that into the loan. So if you got a loan that's 400,000, well now you're going to add 1.75 into that loan amount, but you're not paying interest on it. Same thing with the VA. You're just going to be adding it to the loan if you don't want to go ahead and just take care of it at closing. And when it's, you know, 1.75 or 2.15, sometimes it could be a good amount of money. If it's a $500,000 loan and you're talking a little bit over 2%, that's, you know, $11,000 that you need to pay additional at closing. So a lot of people just finance it into their situation.
Mm-hmm. Right.
Yeah.
Yeah, I think it's
And
easier. I mean, it's not gonna, if your funding fee turns out to be, let's say, somewhere around, for an $800,000 purchase, you're looking at maybe somewhere around like 16 or between 16
yeah.
and 20,000 for the funding
Mhm.
fee. So that's kind of
Right.
minimal to finance. It's not gonna really increase your monthly payments by that much.
And you know, the alternative, and like you said, it's going to be added, and it could be a good 19, $20,000. If you are, you know, using a conventional and you have the money to put down, some people do decide to go conventional to put money down because they avoid that fee. But if you don't have the money and you need to, you know, you want to buy a home and you are eligible for a VA loan, then it makes sense. Yes, you may have to pay this fee, but at the same time, it avoids having to bring in maybe, you know, 5% down or 10% down and get a higher rate, right?
Sure.
So there's always going to be you know, a pros and cons to every situation, you know.
Right.
Yeah. And even on
Yes.
the conventional, you just mentioned about how, you know, you still got that private mortgage insurance in there. For a conventional, if you put the 20%, great, you're good. But if you put down the 3, the 5, 10, 15, it's going to be a little bit of a sliding scale with your credit score as well. So it could be something where it's a low percentage, or you could be a little bit higher. Low meaning, you know, 0.25%, you know, mortgage insurance, or it
Right.
could be a little bit higher, 0.6, 0.7. So it can definitely keep changing depending on your specific situation. Basically, the risk tolerance that the lender has against your against your loan, against your profile. And if they
Right.
see that you're putting down a little bit of money and you have a lower credit score, but you're getting a conventional loan, they might, you know, bump up that mortgage insurance.
Right. And that makes sense. I mean, if you're a buyer
Mhm.
getting a conventional loan and you're only putting down 3% of the purchase price, the
Yeah.
lender's basically funding you almost 100% of the purchase price. So that's a huge risk and liability for the lender to take on. So it would make sense that you would need to have credit that's in good standing, and your
Right.
financial solvency is there, so everything looks great. You have some liquid assets too, maybe some reserves. And so in that case, that's how they judge how the PMI is going to be allocated for this specific client.
Exactly. Their risk tolerance towards you and your profile, and then that's what's going to end up happening. Yeah.
Mm-hmm.
Mhm.
Okay, great. So have you seen less applications coming in within the last 2 weeks as we've seen the rates creep up a little bit? How has the activity been on your side?
Yeah, I think it's continued to be steady. I think the people, I saw a study today, somebody shared with me, where if the interest rate goes up, I think it was like even 2% points, it was going to take out something like 10-15% of the market of the buyers. So yes, it's going to take out people, but it's not going to take out like a 50% drop. There was
Right.
some research already being done that it was going to be, a minimal, 10-15%. Now, we're going to feel that, but at least they wanted to say, look, there's shoppers out there. They know it's the right time. They know they want to buy, especially here in California as well. There's certain areas where if it drops price or if a house comes for sale, people will grab them right away, right? So I've continued to see like a steady amount of applications coming across. Yes, it's something that I do have to talk to buyers. Yes, the rate is at 6.5, 6.7, whatever that rate may be. But what are we offering? The home ownership opportunity, right? Is the seller going to provide some money, like you said, to get that buy down? The temporary buy down gives you a little bit of a runway. That gives you maybe 2 years where your payment will be lower. And in 2 years, this whole, economy can change, so
Right.
you can refinance later on. So it just gives you a little bit of a longer runway, and you're a homeowner now.
Yeah,
So
it
the buy
definitely
down,
beats renting for the next 2 years and taking
exactly.
advantage of what the current market is offering, which is getting into a home, having
Yeah.
having that stability for you and your family, and then offering that fixed payment for the next year, 2 years. And
Yeah.
also, this gives a buyer the opportunity to start getting acclimated with the new budget, new homeowner expenses,
Yeah.
and just setting the tone for what the next, year is going to look like if they're still in that same interest rate. And then they have the another thing to look forward to, which is refinancing, because I know the
Yeah.
rates are going to stay, this high for the next 5 or 10 years.
Right. That's not going to happen. It's going to change. And even as early as, mid-March. So every month is going to be more new data that, the Fed's going to use, that we're all going to use in order to make decisions and to see what's going on in the market. So mid-March, we're going to have new inflation numbers coming out, job reports are going to come out, and
Yes.
unemployment. So all these things, if we show the right trend, the market will react appropriately. So some of the buyers that you mentioned that I am pre-approving right now, I'm giving them that information. I'm saying, look, 2 weeks here, we're going to see some new data. It's going to show us which way we're going to go. Are we going to continue to stay like this, maybe go up a little bit, or are
Right.
we going to turn the corner again? And in the meantime, here's your pre-approval. You guys can go out, take a look at the market, take a look at what's out there, but keep an
Yeah.
eye on March 14th.
Right.
Mm-hmm.
Yeah, absolutely. I think, what I've been telling my clients is, and what we've always recommended on this call is, if it's within your budget and you're able to afford the payment right now, there's no reason why you shouldn't just pull the trigger. And we're here, here to help you every step of the way. So if you ever have any questions, feel free to reach out to us. We missed Bill Gross today. He's taking care of something and was not able to join us today. But we give him a shout out today and hope everything is going well for him. And Gustavo, I just wanted to pull up your information here really quick.
Thank you.
If anybody is, here's Gustavo's profile at Sendero Home Loans. So if you're interested in getting a pre-qualification or just getting your credit looked at without actually having it run, which is a hard pull, he can help you with that as well. So what's your number, Gustavo? It's up here on the screen, but in case they
Yep.
can't see it very well.
Yep, it's 714-334-4563. And like you said, it's a good opportunity to always know where you stand. I've been to open houses, you know, we get buyers out there and they want to buy a home, but then they say, you know, I don't have a down payment, or I only have 10,000. It's like, okay, well, you know, we could have saved them that visit by talking to them and saying, look, there's some programs that you can qualify for. You need 3% down. You know, that could help them, and we make sure that we get them in the right path, right? So
Yes,
the same thing with the
absolutely.
credit score.
Yeah. Yeah, you always have to be prepared. So that's the key, is being prepared so you know what you're getting yourself into, and then working with professionals that can basically hold your hand along the way, so you're never feeling like you're unaware of what's going on or you're not prepared. So this class is meant to be, you know, educational and provide you with that information you need to be successful in your home purchase. So if you have any questions, anybody can reach out to me. I'm reachable at 323-365-9909. I'm Patricia Castillo with eXp Realty here in Southern California in Los Angeles. And Gustavo, you are in
Orange County.
Orange County.
Yeah.
So thank you very much for watching today, and we'll see you next week.
Thank you. Thank you, everybody.
Bye.
Bye-bye.